Fiscal means state treasury. So fiscal policy means policy that is used to manage the treasury of state. Treasury is like a wallet. So like any other wallet, any other treasury, state treasury also have sub-revenues and expenses linked with it. But before talking about revenues and expenses, we need to talk about the constituents of fiscal policy. There are three of them: public expenditure, taxes, and borrowing. Public expenditure, as the name suggests, deals with the expenses. There are two main prominent type of expenses. One related to the infrastructure of a country, and that may include roads, construction of roads, buildings, making hospitals, schools, etc. And the other type is social spending, spending on the healthcare of people, spending on the education and subsidizing the foods. These might be the examples for the social spending. The second one is taxes. Taxes are actually a burden on individuals and businesses. They are imposed on them. They are actually a compulsory share from their income to the government. So let's talk about the structure of taxes. There are three types. Proportional tax. In proportional tax, irrespective of your level of income, everybody has to pay the same tax rate on their income. For example, if you are earning 100,000, so you have to pay 10% of tax. Even if you are earning 10 million, so the same bracket will apply on you, 10%. Progressive tax. Progressive tax, as the name suggests, as your income will increase, the tax bracket will also increase. For example, if your income is 100,000, you have to pay 9% of the tax. This is an hypothetical example. If your income is 200,000, then your tax bracket will increase to 10%. If your income is 300,000, your tax bracket might further increase to 11%, and so on. Regressive tax, the third type, it is an indirect tax on commodities, and it is a tax that takes a higher percentage of income from low income earners than the high income earners. For example, let's take a common one, the consumer items which we consume on daily basis, for example, milk, butter, etc. More or less we all consume it in the same quantity. So the lower income earners will feel the amount of tax being paid on them more as compared to those who are rich and buying the same amount of commodities. Their income level is higher as compared to the others. So the amount of tax, even if they are paying on them, they feel like it is minuscule. So let us now talk more about taxes. Income taxes are the taxes actually the main source of revenue for the government. There are 5 heads of income. First one is salary. Salary is an income that is being earned by the employee, that is being employed by the employer. Income from business. Every person who is doing certain amount of business and he is getting the return out of it is income from business. The third one is income from property. For instance, we buy a property, we put it on rent, and the rental income that we get from it against it is income from property. Income from capital gains. Capital gains are actually the gains a person might have from disposing of the capital assets. For example, if I buy a house and dispose it off, so if I dispose it on profit, so I might get some gains. For example, I have bought a house for 20 million and then I have disposed it off at the price of 30 million. So I have gained 10 million. That will be a capital gain. So it also applies to the shares, stocks and bonds as well. Financial assets and real assets, both. Income from other sources. These include income derived from dividend, lottery, interest income, inheritance, etc. The third and final constituent is public borrowing. Public borrowing refers to the borrowing of funds by the government to finance public expenditure when tax revenues are insufficient. The government can borrow from both domestic and international sources, such as selling bonds to investors or borrowing from international financial institutions. Just like the monetary policy, fiscal policy is also used to control the flow of money in the market. If a government wants to reduce the amount of wealth in the hands of people, it will impose more taxes and reduce government spending. Conversely, if government wants to reduce the amount of wealth in the hands of people, what it can do is to reduce the imposition of taxes and increase the government spending.